Why the world is buying gold? You've probably heard it, you've seen it. Gold was the rage for the last couple of years. It's now came down again, but I still think everybody should be watching and paying attention to gold. In this presentation, I'm going to break down exactly why that is the case. Remember, this is according to my own research. This is data I've taken from all corners of the internet. If you do want to keep up to date with gold on a weekly basis, I do have a free newsletter where I do cover that. Link to that will be in the description. People are losing confidence in the dollar, in fiat currencies. I think this is the most notable reason. So central banks do not buy gold at record levels because they are speculating. Gold is being accumulated, banks and central governments can't have enough of gold. They're accumulating that, record levels, or they have been, that trend's been going up because people are losing, confidence in the dollar and fiat currency. And they saw what happened with Russia. Every central bank watched what happens when Western nations froze, $300 billion worth of Russian assets or foreign exchange reserves. So physical gold is a counterparty risk. It is no risk, to holding that physical gold. So as we spoke about, dollar dominance is being questioned, not replaced. As people know, the dollar is the global reserve currency. Before that, it was gold, and fiat currency's trend is like that. It's literally going zero. You can look at what a dollar got you in the 1950s, 60s, 70s compared to what it gets you now. It's a lot less. It's just going down. So you've got to take that into account, and central banks are. And yeah, fiat currency is eroding worldwide, and this is inflation cycles, money printing. Debt levels are absolutely insane when it comes to it. So more and more central banks are treating gold as an asset that holds its value and paper currency does not. So it's, the counter to holding fiat, and banks see this as a safe store of value. The Bank of Korea. So I've got a tweet here, and this is why I actually did make this presentation. This was kind of like the inspiration behind it. So the Bank of Korea announced it will resume physical gold purchases for the first time in 13 years. Again, this is a sign. If somebody's inactive of doing something which they were doing before consistently, and now they're resuming it, something has fundamentally changed. And it's happened globally. You've got Poland, you've got China, Uzbekistan. They're all communicating. They're all accumulating gold at these levels. So, countries now starting to say we're going to start accumulating gold again does show that there's cracks in fiat currency, probably more so than ever. 2% inflation is probably worth mentioning as well. Like, are we ever going to see 2% inflation again? Did we ever see 2% inflation? Probably not. But in the data that they do release, are we ever going to see it again? I'm not too sure. It's something definitely to watch. And is it something to watch that will they actually increase the target to 3%, not 2%? That's something that definitely could play out, obviously, in the long run. Central banks are buying gold at record pace, as we spoke about earlier. So this is, again, obviously I've referenced the data there. So biggest quarterly addition since Q4 2024 was, central banks. So central banks are accumulating gold at record levels. Poland, led this with 82 tons accumulated year to date in 2026. So this is, H1, you could say, in 2026, the first half of the year. China added tons, Uzbekistan, which we spoke about earlier. The buying is broad-based. It's not concentrated in one nation. It's not like one nation is doing it. Everyone's doing it. And now other nations are picking up, like the Bank of Korea. They're resuming their gold purchases for the first time in 13 years. So it is one of those situations where, a bit like reflexivity, right? George Soros speaks about when something goes high, it becomes better, and then people start buying. The things get better for it because it keeps going up. Could that be happening with gold with central banks? Maybe. So I wanted to talk about this from Cross Border Capital. If you've not seen any of Michael Howe's stuff, you've got to check it out. It's brilliant. He does loads of podcasts. He talks about markets from a global liquidity standpoint. And here we have a chart I've used from them, which is People's Bank of China, liquidity and gold. So this is them compared to what they do. So Michael is like the king of liquidity. But yeah, please do check him out on podcast. He's really good. And as you can see, he's got a chart of China and Chinese liquidity and the gold bullion price. So as you can see, they've kind of been going up. Obviously, gold peaked a bit too far, kind of went back down, but it probably will catch it up. So the liquidity and the gold price have tracked perfectly almost since 2022. As you can see there, they were pretty close together, but they've been very close ever since that 2022. And this is the second largest economy ever. So as you can see here, Chinese monetary policy is a significant driver of the gold price, as China expands its money supply, the demand for gold follows. So you could almost say they're devaluing their currency to buy gold. That could be something. And I believe if you do look at their own currency, again, it's been going down because there's people have been saying they've been devaluing their own currency to accumulate gold. And China is the second largest economy. So yeah, it's effectively the second largest economy in the world is printing money, devaluing their currency to buy gold. So this is pretty interesting to look at. Michael explains this much better than I do. So if you do want to get more information about that, you do check out his stuff. Global Liquidity Indexes, Cross-Border Capital. Michael Howell, you'll be able to find him on YouTube. But I thought this was really interesting to look at. The second largest economy is not you could say manipulating the gold price. Yes, you could, but they are buying at record levels, and that correlation has been very close. So look, the verdict. Central banks are buying, and you probably should too as well. What happened in Russia with the assets being frozen, people want risk and counterparty risk away, and they can get that through physical gold. And you've got to be watching the People's Bank of China liquidity and gold correlation. Look, gold, I think, is one to add to your watch list. I'm not going to say be aping on gold, but I think there's enough data, there's enough things in the world going around. Like, you want to be doing what these guys are doing. Value investors won't invest in gold because it doesn't produce any cash flow and there's no way to value it and so on. But gold has done tremendously well over the last 2 decades. You could just say from the year 2000, it's done very well. And I think it's something that everybody should be watching closely and more closely than ever. So as I mentioned, if you do want to keep up to date with markets, I do have a free newsletter. Links to that will be in the description. See you in the next one.